Hey guys, welcome back. In today's video, I want to talk about the ticker SNOA for two reasons. One of which I traded it today and it was the only ticker I traded today. And the second reason is because this ticker is notorious for flushing at the open. So it has these gap ups and it doesn't hold the highs. And I want to talk a little bit about why that is as well. I figured this is actually a really good example ticker to dive into. Now we see this a lot on tickers that we trade in the past. I've traded this on most days that it gapped up. But you notice that it doesn't really hold the highs well. And that was actually one thing when I went into trading today, keeping that in mind. And I'll talk about my stats trading this ticker in the past. And before I talk about my trades, my past trades, I do want to check out the SEC.gov site, Edgar, where you can retrieve all the SEC filings. And one thing you see quite a bit here in the filings on SNOA is they've been relatively busy, which usually means there's, for these small caps at least, there's some sort of offering in play. And if you just check out one of the recent ones on a third perspective update, you can scroll down here. I just searched for at the market. You can see that here at the bottom, and boom, you have 5 results. And basically what this company did is they raise capital, they dump them into the market, and they make money that way. That's how this company is staying afloat. And this is something that's often referred to as a dilution, and all companies do it, from Coinbase to Tesla. You see it again and again. The problem is the larger companies, they have a little bit more responsibility to their shareholders. I would say technically all these companies are equally responsible to their shareholders and investors. But with these small companies, dilution has really significant effects. And especially companies like biotechs, the only way they're able to stay afloat, because they spend years developing drugs that sometimes never really turn up, is constantly raising capital through the markets. I mean, that's what the capital markets are technically for. However, it can be really bad for investors that constantly get diluted into, because basically your equity share gets less and less, and also the company price typically goes down as well. So it's a little bit of a double whammy in that regard. Anyway, this company did sell another 550,000 shares. So that was dilution. They sold shares into the market at the market. So they just sold it into the market, or whoever wanted to buy it, and then they could sell it into the market for about $5 million here. So if we just go to SNOA, again, this company's share float is about 2.07 million. So boom, just like that, another 500,000 shares on the market. And a lot of times these offerings happen, or people that buy those offerings initially will wait for these spike days. This is a little bit of a pump and dump, where these companies will then put a press release or some good news, and then when the price spikes up, the company or the early investors or the people that bought those warrants will then start selling into the market. And that's what you see here time and time and again. So when we are on the daily chart on SNOA, I've noticed that. I've traded this ticker multiple times. And you think, oh man, Alex, you're constantly buying it at the tops. Well, that's not really the case, because the way I trade this ticker is I have that anticipation that this company is going to sell off. So let me show you guys a little bit how I've traded this one in the past. And in the past, I traded this one with fairly small size, average cost here around $6,000. Today I traded with a little bit bigger size, but I'm up around $1,700 on that. So that's a pretty good return for my average size only being $6,400. It's actually a really nice return. That's basically, I made over 200% back on my my initial investment based on 13 trades. So if we just kind of check out how I traded this one, let me show you guys an example of how I go ahead and trade this one. So into the market open, we'll have these really aggressive runs to the front side. Let me zoom in a little bit more. And you can see this on the 5-minute, but after the market open, it's a lot of chop and then just sells off the rest of the day. So what I try to do is I try to run that front side as long as possible. And that's again what we were able to do today. So let me go now to today and just talk about my trades, how I went about trading this one. And yesterday we had a little bit of a debate on, stopping early, and today was really the day to stop early. Everything pretty much at the open was just chop and very difficult to trade. Even DBGI, let me just show you guys here a little bit. This was probably our second lead gap around the day. I mean, look at this open. It was just all over the place. We had, this just absolutely devastating kind of flush and failed breakout here, and more flushes. And I mean, this is pretty much the recap of the whole entire day. Okay, so let's go back to SNOA here and zoom in a little bit more here, and then here. And then, yeah, the daily chart you see here on the bottom right. So this is the daily, the 5-minute, and then the 1-minute. Breakfast is really hitting right now. Ugh. All right. I just had a bunch of breakfast and it's a little difficult to speak right now. Anywho, this ticker, boom, big pop up right away, 50%. And this is right, I was actually a little bit late to the market today, and Colby was making fun of me today because I just logged in and I went right into a trade. So a little bit hectic there. Right now I'm in Panama City, so the pre-market opens at 7 a.m. Eastern Standard Time, and I'm an hour back of that. So it's 6 a.m. and I just, boom, I logged in and then started trading from there. Actually, a few minutes late. I actually logged in at like 7:03. So my first trade is after I saw this and it was pulling back, and I was like, there's a good chance that we're going to have the continuation. At this point, I didn't really remember that SNOA moved the way it did. I did see the daily chart, but I didn't look at my past stats on it, which I do like to do oftentimes on charts. So the first trade on this one, I just got aggressive here into this breakout. I saw this move and I was just like, you know what? I'm not letting this one slide by, because right now we're on the front side, aggressive volume. There's nothing else moving. It's up 50%. Let me trade it. So I got a trade here. And this was actually one of my better trades of the day. I did kind of close a little bit quickly, and I should have added where I closed, but I made the same mistake yesterday. I closed too soon. I closed where I should have added more into the breakout. But this trade right away put me up, I think, like $400 or $500 on the day, which was pretty nice. And in that time when I was in the trade, that's when I was searching for these stats, and I was like, okay, SNOA looks like I'm pretty geared in on this ticker, so let me keep trading it. And I also realized, man, this ticker oftentimes sells off quite a bit at the market open. So if we're going to get a good move, this is probably going to be it. And by the way, guys, if any of you want to check out my trades and do this on your own time, and you're saying right now, Alex, like, that's great that you have all these historical trades you can look at, but I don't have that luxury. That's not true. You can go to my portfolio totally free, and you can search it right here under view all portfolio stats, and you can search it just like I'm doing right now. I just wanted to share that with you guys. Okay, so let's go back here to the action on SNOA. Let's make this a little bit bigger and go to the next candle. It pulls back here, and look at this. I'm buying into the pullback. I'm accumulating right now. And this time I'm getting a little bit bigger size. And then I think the next candle we had to pop up here. And then I was waiting for a little bit bigger move. I thought we were going to get that next rip because we still had some really decent upside here. So check this out. We're at around $8. And if you go to the 5-minute chart, that's right around this area. So I was thinking we have good upside till 9. That's why I was getting pretty bullish on buying here into this pullback. And let's quickly go to the daily as well. So right now we're pulling back to this $8 zone, and we have that big resistance right around here at $9 and $10. So I thought, okay, well, this is usually an area where we have a lot of these fake outs and, potential breakouts. And then sometimes we have these big breakouts past $9. That's why I thought $9, $10 is something that we could definitely see. That's why I was pretty bullish on buying into this pullback. Now let's keep going. We did have a very light volume breakout, and light volume breakouts is usually a sign that there's not going to be continuation. So I went ahead and took some profits there, which is debatable. Is it the right decision? We're still on the front side. I should be getting aggressive, but I was up, I think, like $800 at this point. I just kind of wanted to lock in some profits. It did pull back, and this is where I made a little bit of a mistake here. I should have rebought and got ready for another potential breakout, because that's ultimately what happened. I got in late, and then I closed right away. I went with small size, and then I tried it a few more times, and it basically was just chopping around here in this area where I kept on not trading that big breakout. But this was a 10-11% move. So, right there, if I just went with, not even full size, but I've been trading kind of max size around $25,000. So if I just went with like $20,000 or so, this could have been a $2,000 profit move right here. Obviously, I probably would have not had the perfect entry or perfect exit, but even without a full size, it could have been a really, really good move. And that's kind of where I feel like I stopped trading a little bit too early, or I didn't get aggressive enough long enough. And I got to say, I'm kind of biting myself a little bit about that one, but it is what it is. I'm up nicely. And even in this area right here, this is where I made the bulk of my profits today. I'm up $1,178. And just like that, in 6 minutes, in between these two trades that I did, I could have walked away. I could have been done in 6 minutes of trading. So that was already a pretty cool thought alone. But again, you don't want to stop too soon. You don't want to leave profits on the table, because if you do that, then oftentimes you'll start getting FOMO later on and start jumping into mistakes later on. We were talking about that in the Discord again as well today. So move forward here. This thing's still holding its highs. We had to pull back to VWAP, and I was going through some of my stats at this time. Again, I even shared in the Discord, and I was like, look, guys, last time it pulled back to VWAP really, really nicely, and we had that good continuation from here. So that's why I tried a few few of these VWAP trades. I think Colby nailed this pullback trade and got that perfect pop here to the upside. That was a really nice one. I tried again here buying this pullback, got a little bit of move here, but at this point I'm doing small size and I'm not holding very long because I just don't have that conviction left in me that we're going to get that rip through 9.5, and ultimately we don't really, and we just stall out here a lot. This would have been a good ticker to maybe scalp a bit, but man, after you know, all these failed attempts here, I wasn't really interested in trading SNOA. Now it has no more volume, and honestly I'm not too bullish on this ticker later in the day. If we break 6.8, I really think it can get ugly here for SNOA, so I would not be holding on to this ticker, no way whatsoever. Maybe we're going to get some sort of push here to $8 again, but I wouldn't be so aggressive on SNOA right now. So I'd be a little bit careful if I was, you know, still long it, or in terms of, you know, holding overnight. I really don't think it's going to be a play for me. And this was one of those classic tickers where you want to get aggressive early on, ride the front side as long as possible, understand where the big resistance zones are, and try to trade it as aggressive as possible until those zones, and sometimes even past those zones. This one, I would have probably kept on trading, especially if we broke 10. I would have got so aggressive again. But in this area, I was cautious. I was definitely cautious because I knew this ticker failed oftentimes, and I felt like, you know, buying into these breakouts near this big resistance was a little bit risky. So if I really wanted to, you know, try for these breakouts, I probably would have tried to accumulate early on. So if it didn't break out, I could at least cut my losses and not constantly buy into these failed breakouts. I think that would have been an okay decision. I probably could have walked away with a little bit more money. But ultimately, everything that I did in this area was small profits. I made the bulk of my profits in these two trades, and if I just got a little bit more aggressive on this last little move here, I could have made even more money, and end of the day at least up another $1,000 or so. So it just kind of goes to show that if you're on the front side, you really want to be getting aggressive on this stuff. And then, you know, if you know, this was a pretty disastrous open, but just be a little bit careful on when tickers are pulling back, because when you're trading the backside, you know, you're looking for those small profits, but you're always risking these flushes. So backside trading, I've been doing a lot less of it lately. There are certain months, especially in the summer and when the market's a little bit slower, well, you get pretty clean backside moves, and you could really make some decent money with backside. Sometimes it's my best pattern of the month, but lately it hasn't been, and especially on hot markets, it's not good at all, because after the front side's over, the tickers will start dumping pretty hard, and that's when trading the backside becomes more risky than anything else, and the risk reward is always negative, usually trading backside. This would be actually a great time to get short, but with TD Ameritrade, usually there's no shares available to short on these small caps, so that's a little bit of a problem, and probably a big reason why I'm a long bias trader. Primarily, I do short a bit, but not nearly as much as others on these small caps for sure. All right, guys, that's all for this video. Thanks for tuning in. It's nice to have a little bit of a green day in a pocket, especially after that, you know, back and forth of yesterday. Yesterday was also green, but it was just like one step forward, one step back. Today was just one nice leap forward, and then I just kind of ended it. But I would like to keep on trading, and I was ready to go. I was watching the open today, but I just didn't see that opportunity, and that's why I didn't do any more trading. So I was watching, but I didn't feel like there was anything worth it. I was constantly waiting for a ticker to be back on the front side so I could start getting aggressive on those moves. Anyway, guys, don't forget to drop a like on the way out. It's the easiest way to support the channel. Definitely consider subscribing if you're new. We'd love to see you again. And like always, stay safe and make some awesome trades. Ciao, ciao.